You're watching Mint Wide Angle, and I'm Anindya Chakravarti. You know, at the beginning of every year, I make a pious resolution. But this time, I'm going to file my income tax returns entirely on my own, without taking any help from my CA. But then when I get down to it, I get nervous. I start worrying. Have I got everything right? Have I shown all my sources of income? Did I invest enough in tax saving schemes? Have I got that house rent receipt in place to get the tax rebate on HRA? I get confused, turn everything upside down to look for documents, get irritable and tense, and my family avoids me like the plague. That's when I throw in the towel, pick up the phone and call my CA. I could easily save the fee that I pay him if I were a little bit more systematic. But then income tax laws are notoriously complex, and the last thing I want is a sudden tax demand or a summons to the income tax office because of some calculation error I made in my returns. So people like me should welcome this new option the finance minister has given us of a simplified tax system with lower tax rates if we agree to give up all exemptions. That means no tax saving investments, no rebates on house rent or the interest you pay on home loans or on insurance premiums, and also no standard deduction. It's true, exemptions do make taxes complicated and unwieldy. You have to keep track of many things, you have to maintain records and preserve documents that will prove that you do deserve the tax rebates and you aren't just trying to game the system. If there are no exemptions, then it is a simple, straightforward calculation. You earn this much and a certain proportion of that has to be paid as income tax. But exemptions are not meant only for you to get a chance to reduce your tax outgo. They're meant to nudge taxpayers into certain types of economic behavior, which have a bigger, what can be called macro impact on the economy. For instance, when you and I save in certain types of schemes, whether it's a provident fund, infrastructure bonds, etc., we end up creating a pool of savings that is locked in for a long time. The government borrows from this savings pool and spends on things that spur the economy. They build infrastructure, invest in health and education, or help the poor, or even protect India's borders. It also instills a savings habit in us. When we decide to take out 10,000-12,000 rupees per month and put it in tax saving instruments, we are effectively telling ourselves that it is important to save and not gratify immediate urges like buying that latest phone or going to a fancy restaurant. This habit is important not only for us but also for the economy as a whole. As households get into the habit of saving, banks get more deposits. They use this as a base to lend to businesses. These businesses use this money to invest, to produce goods and produce services. Savings, therefore, is an essential engine of economic growth, and tax exemptions on small savings are crucial in making people develop the habit of saving. Similarly, tax rebates on medical insurance premium or life insurance premium induces people to buy insurance. How does that help the economy? It ensures that there is a corpus of funds available to pay hospitalization bills. In effect, the entire community people who have insurance collectively pay for each other in times of need. And it also ensures that hospitals can make money to be able to pay the best doctors and get top-of-the-line medical equipment. Insurance, therefore, is the market's way of collectively paying everyone's medical bills. Tax exemptions are also useful for encouraging important sectors of the economy. In India, the housing sector has got a huge boost for several years now from the tax exemptions that have been available to people who take home loans. When you get a tax cut on the interest you pay on your home loan, you're effectively paying that much less for the house you have bought. This is not only good for you, but also good for the real estate developer who's selling you the house. They hold their selling price, but the government is effectively making it cheaper for you to buy and therefore boosting demand for housing. And obviously, banks and housing finance companies also gain because home loans become that much cheaper and therefore more attractive. The same thing is true for tax benefits on house rent allowance. It boosts rental yields on property that you own and encourages people to invest in property. Tax exemptions do one more thing. They put you and me at par with corporates. Think about it. Businesses are taxed not on all the money they make, but only on their profits after they've deducted all their costs. What about us? We also incur some costs in the process of earning our income. It could be the cost of transport to reach our place of work. It could be the cost of the formal clothes we have to wear to office. Or it could even be the money we have to spend to keep our skills up to date. The old tax system recognized this, and it said that here's a lump sum of money which will be deemed as the expenses that you have to incur to earn your salary. This is called, you guessed it right, standard deduction, and that amount became tax-free. By removing all exemptions, Ms. Nirmala Sitharaman might be simplifying things for us, but she's also tilting the scales against the tax-paying individual. She's also giving up a crucial tool that the government has in its hands to induce savings and to encourage spending in important sectors like housing, which provide employment to millions of India's poor. So removing tax exemptions might appear to make things simple, but like most things in economics, the result is much more complex.